Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to Tax Smarts Unlocked. I am David Robson, your guide to turning messy travel receipts into clean, defensible deductions. Today we are unpacking the tax implications of business travel for small business owners. We will cover what counts as business travel, which expenses you can deduct, how to mix business and personal days without mixing up your taxes, and the record keeping that wins audits. Expect practical strategies, a few laughs, and clear action steps you can implement before your next trip. Buckle up, tray tables stowed, because smarter planning can keep more cash in your business where it belongs. First, what is business travel? The IRS focuses on your tax home, the city or area of your main place of business, not where you live. Travel away from that tax home becomes deductible when it requires sleep or rest to meet work demands, the classic overnight rule. Commuting between home and your regular workplace is never deductible, even if you take calls in the car. However, trips from your office to a client site, supplier, or temporary work location generally qualify. Always anchor your analysis to your tax home and whether the trip requires you to be away overnight. Next, temporary versus indefinite work locations. If you reasonably expect a project at a location to last 1 year or less, it is temporary, and travel to that site can be deductible. The moment your expectation extends beyond 1 year, it becomes indefinite, and trips start to look like non-deductible commuting. The test is about expectation, not just what ultimately happened. Document the scope, timeline, and communications with the client. If facts change midstream, update your file and treat costs accordingly from that point forward. This rule often decides whether months of lodging, meals, and mileage are deductible or not. So, what is deductible when the travel qualifies? Transportation, airfare, train, bus, rideshare, taxis, and reasonable baggage fees. Car expenses to and from business destinations, lodging while away from your tax home, internet charges to work, in-flight Wi-Fi, airport lounge day passes if used to conduct business, and tips related to these services, shipping materials to a conference, printing, and phone calls, laundry and dry cleaning on trips lasting days. Keep it ordinary and necessary for your trade, and tie each item to a business purpose. Hotel gyms, pay-per-view movies, and mini bar raids seldom qualify. Meals on the road are usually 50% deductible. To qualify, the meal must be ordinary, necessary, and directly related to your business. That means a clear business discussion, a client, prospect, referral source, or employee present, and documentation of who, where, when, how much, and the business purpose. Entertainment is carved out. Show tickets, greens fees, and sporting events are not deductible, even if business is discussed. You may buy a client dinner before a game and deduct 50% of the meal, but the tickets themselves are not. Keep separate receipts because bundled charges often get disallowed during examinations anyway. Per diem can simplify substantiation. Self-employed taxpayers may use federal meals and incidental expenses per diem rates instead of actual receipts, but not lodging per diem. You must still document the date, place, and business purpose of each trip. Employers can pay employees per diem under an accountable plan, which requires expense reports and returning any excess. Done right, reimbursements are tax-free to employees and deductible to the business. Choose the high-low or locality-specific rates consistently for the year. If you pay allowances without receipts or returns of excess, they become taxable wages subject to payroll. Using your vehicle for business, you can deduct using either the standard mileage rate or actual expenses. Standard mileage is simple. Track business miles, multiply by the IRS rate, and add tolls and parking. Actual expenses require tracking fuel, repairs, insurance, registration, lease interest, and depreciation, then multiplying by your business use percentage. Choice matters. If you use standard mileage in the first year of a vehicle, you preserve the option to switch later. Starting with actual can lock you in. Regardless, you need a contemporaneous mileage log noting date, destination, purpose, and miles. Estimate later, and auditors estimate downward. Mixing business and personal travel is allowed, but allocate costs. If the primary purpose of the trip is business, airfare or long-distance transportation is generally deductible, even if you add a couple personal days. Lodging and meals are deductible only for the business days. Rental cars and rideshare should be split by business and personal use. If the primary purpose is personal, you can still deduct incremental business expenses, such as a day pass, co-working space, or a taxi to a client meeting, but not the airfare. Keep an itinerary, meeting invites, agendas, and notes to substantiate business purpose. Bringing family along? Your costs are deductible only when there is a bona fide business purpose for each traveler. A spouse's airfare is deductible if your spouse is an employee, has legitimate duties on the trip, and would have traveled regardless of relationship, have a job description and payroll records. Otherwise, only incremental costs count, such as a hotel room costing the same for 1 or 2 guests, or a rental car you needed anyway. Extra tickets, additional rooms, and added days for sightseeing are personal. Keep separate receipts and note duties performed so there is no confusion later onward. Conferences, training, and conventions can be excellent deductions. The event must maintain or improve skills for your current trade or business, not qualify you for a new profession. Registration fees, travel, lodging, and eligible meals are in play. For cruise ship conferences, the rules are strict. Daily agendas, statements from the organizer, limits on deductible days, and a cap per day apply. Foreign conventions must show that it is reasonable to hold the meeting outside the United States and that your participation benefits your business. Save agendas, session notes, badges, and proof of attendance to demonstrate the business nature clearly. Foreign travel has extra allocation rules. If you travel outside the United States primarily for business, but include substantial personal days, you may need to allocate airfare between business and personal. High-level tests look at whether the trip lasts 7 days or less, whether less than 25% of time was personal, or whether you had no control over the itinerary. If one of those safe harbors applies, the airfare can remain fully deductible. Track days and document meetings. When allocation is required, divide airfare by days or use methods tied to schedules. Lodging and meals follow day by day. Day trips and local travel have special rules. If you do not need sleep or rest, meals are generally not deductible. However, local transportation between business locations within your metropolitan area can be deductible. Trips from your office to clients, vendors, banks, or temporary job sites. Commuting from home to your regular office remains non-deductible, even on weekends or late nights. If your home qualifies as your principal place of business, trips from home to other business locations may be deductible. Keep a mileage log for local trips, and note the business purpose for each stop so there is clarity. Remember the phrase not lavish or extravagant. Reasonableness matters. Upgrades like first-class, suites, and luxury cars draw scrutiny, especially if comparable business options were available. Document why a higher cost was necessary, such as last-minute availability or required equipment space. Record keeping wins audits. Keep receipts for lodging and any expense of $75 or more, plus contemporaneous logs showing who, what, where, when, and why. Use apps that scan receipts, store itineraries, and tag business purpose. For S Corporation and C Corporation owners, use accountable plans to reimburse expenses, tax-free. Sole proprietors deduct directly on Schedule C. Business travel can create state tax surprises. Spending days working in another state may trigger filing obligations, payroll withholding for employees, or even nexus that subjects your business to income or sales tax there. Track where you and your team work, and consult a professional before crossing new borders for meaningful projects. Common pitfalls include missing receipts, round number estimates, treating personal trips as business, deducting commuting, and misclassifying entertainment as meals. Another trap is failing to document the business reason for each day on the road. If it looks sloppy, an auditor will assume the taxes should be higher. Quick case studies, trade show plus weekend, airfare deductible if primary purpose is business, hotel and meals only for business days, contractor 10 months away, temporary assignment, so travel, lodging, and 50% meals deductible, spouse at meetings, deduct her airfare only if she is an employee with bona fide duties, else incremental costs. Today we covered tax home, overnight rules, per diem, vehicles, allocations, conferences, foreign travel, local rules, reasonableness, and audit records, proactive moves, book through business accounts, set per diem policies, plan itineraries for documentation, review trips quarterly. Action step, schedule planning at info@premiertbs.com. Thanks for listening, everyone.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.